Uh-oh, what's this? Deutsche Bank? Oh, no. Zero hedge. Regulators stunned by Deutsche Bank's spectacular 12x, 12 times, VAR or VaR trading blowup. That's like, it's the most troubled bank on the face of the earth. More derivatives sitting in that freaking thing, ready to implode at any moment. Walking dead man, as I like to have said over the years. It's amazing how long that walking dead man can go. Lifeless corpse. Until recently, Deutsche Bank was best known. Hang on, hold the phone. Where's my little thingy majangy? Here it is. Right. Oops. Got too many screens opened, my friends. Too many screens. Until recently, Deutsche Bank was best known for being the worst managed mega bank in the world, for having attempted rigging and manipulating virtually every single market and getting caught for doing it, for having been secretly added to the Fed's troubled bank watch list, for having been told by the ECB, European Central Bank, to simulate a crisis scenario, for accidentally transferring 28 billion euros to an outside account, and of course, for having some $50 trillion in gross notional derivatives on its books. Ooh. That last one's the kicker here, by the way. I mean, not necessarily because of what I'm reading you, but that's the kicker. It's always been the kicker for Deutsche Bank. Was it Warren Buffett? Weapons of financial mass destruction, he called derivatives. As of today, it is also known for having reckless traders on full tilt who go all in, bet the house, and lose. Well, why wouldn't they? Did you catch that one part? They were added secretly to the Fed's troubled bank watch list, and you know they were a recipient of bailout money. Why not gamble? We'll get bailed out. Can't lose. As first noticed by Bloomberg and disclosed publicly in a May 7th federal financial institution filing, unknown Deutsche Bank traders suffered a staggering one-day loss in the first quarter that was almost 12 times VAR, or 12 times what Deutsche Bank's risk officers have estimated for regulatory purposes it might lose on a typical day. What do you think the worst case scenario, or typical day actually? What's 1x? What just happened? 12x. Oh. Even a loss or 2 or 3 times VAR on a given day is unlikely. 12 times is extraordinarily unlikely. MIT finance professor Andrew Lowe told Bloomberg. This loss, which is unrivaled in either Deutsche Bank history or in other banks' first quarter reports, was oddly left out of Deutsche Bank's earnings report, and as BBG notes, raises questions about U.S. regulators' ability to have an accurate picture of a foreign bank's operations if metrics such as value at risk, or VAR, show only a fraction of potential trading exposure. It also confirms that the Fed has ample reasons to be worried about a bank. I'm thinking of an 80s song. I can't help it, man. I've been worried for a bank like you come into the taxpayer's life. It also confirms that the Fed has ample reasons to be worried about a bank which is willing to not only gamble the house on some wild trade, but also lose as a result. The staggering Q1 loss is more than 6 times greater than the next largest disclosed VAR exception, that of BNP Paribas. Most banks well under VAR, as they should. And if you want to see what that looks like in chart format, chart it up right there. Throw a dart. Which one do you think is Deutsche Bank? Unbelievable. Such a high trading loss is off the chart, said Gregor Weiss, a professor at Leipzig University and an expert in financial risk management. It's definitely something a supervisor will look into. Any heads gonna roll? Anyone gonna get fired? Nope. Why not? We'll get bailed out again. What do you think? Or this time, is it possible this time they're willing to let the banks go, the big ones like Deutsche Bank? Maybe it's all by design. Maybe they want to implode the financial system. And instability in that financial system means what to cryptos? It might mean a flood of money coming in. Now, where were we? Yeah, so it's definitely something a supervisor will look into. And they did. The issue of the giant loss. There's no ASH. It's SS. Loss. The issue of a giant loss and subsequent attempted cover-up, or at least lack of disclosure, is particularly stark at Deutsche Bank, which has increased capital levels at its U.S. business after multiple failed stress tests and cease and desist orders. More from Bloomberg. Multiple U.S. regulators, including the Federal Reserve, inquired about the outsized loss, according to a person with knowledge of the discussions. Eric Colleague, a Fed spokesman, and Richard LeConte, a spokesman for New York Department of Financial Services, which supervises part of Deutsche Bank's U.S. business, declined to comment. Yeah, why? Because if you even hear that we kind of sort of look into Deutsche Bank at all, and somehow they just did a 12x gamble and lost it all, you're going to ask us, how the hell did we, what are we doing? And we can't tell the truth. Nothing. What are you going to do? Nothing. But you need our services. You need to pay taxes, more money, big fat salaries, big fat pensions and pay packages, you name it, for us to look like we're doing something. That's probably why they declined to comment, in my opinion. While Deutsche Bank didn't disclose the size of the loss, one can back into it based on the disclosure or the disclosed average regulatory value at risk during the period, which was $30.8 million, which would imply that the total loss was roughly $400 million, although as Bloomberg caveats, because daily variations in the figure aren't disclosed, it's impossible to know what the exact loss was. No, but we can kind of pen in that probably around 400 million. Again, we got a backstop with the taxpayer. Not even just the tax. When I say the taxpayer, notice how I didn't say the American taxpayer or the such and such country taxpayer. I just said the taxpayer. Because we're global, we're systemic to the global financial system. Taxpayer over there, and a taxpayer over there will come to the rescue. But again, Donald Trump's in charge now. But see, the thing is, this is one of the parts that worries me, I'll say. Donald Trump loves to talk about how great the numbers are, unemployment, great numbers. If that bank goes down and they don't step in, the regulators, whoever, or not even regulators, the government's basically to do some kind of bailout in any way, shape, or form, could drag the stock market down, could make Trump's numbers look bad. So it might be in the best interest to do something about Deutsche Bank and prop it up again. But then you have the other side of that. We already did that. You gave the banks all the money. We taxpayers got nothing. We got evicted from our houses, foreclosed on. Again, I'll say it for the thousandth time. Give us the money. We would have paid off the debt we owed. Maybe not. Maybe it wasn't enough to pay off a house. But, car, credit card. Okay, great. Thanks for the money. Who got the money? The banks did. Because you paid them their debt back. How did it work out? You lost. They foreclosed or but took back the property, car, whatever collateral, and got the bailout money. You get nothing. Good day, sir. That's how that goes. Not even that's how that goes. That's how that went. Unless you were man enough to stand up and fight for it and say, I'm not taking this. I'll fight that foreclosure. I'll fight that credit card. I'll fight that credit score. I did. Because I saw how it was wronging everybody, including myself, and I will not put up with that shit. And I didn't. And since the gargantuan one-day loss took place in a quarter in which Deutsche Bank reported trading revenue of negative $64 million, indicating losses on trading positions, while the Barclays and Credit Suisse each reported more than $100 million in positive revenue. We can be further assured that this was indeed some spectacular trading blow. According to Bloomberg calculations, the extreme day was one of 4 in the first quarter in which Deutsche Bank's U.S. traders had a loss that surpassed the firm's regulatory VaR estimate. However, it is unlikely that any of the other 3 came even remotely close to 12x VaR. Others did much better. No other bank required to file quarterly reports with the Fed detailing significant trading activities had more than 2 such days, and none had a daily loss that even doubled its estimate, according to a review of the 33 filings from U.S. lenders. Anyways, needless to say, it's been a tumultuous year for Frankfurt-based Deutsche Bank, which, following a series of unfortunate events, reported the latest abysmal quarter. Days after the quarter closed, Deutsche Bank naming Christian Sewing, previously its deputy chief of risk, to take over as chief executive officer. If only more risk managers were at the bank at the time its traders were taking on 12x VaR risk positions, the quarter may not have been that terrible. As for the consequences, quote, the firm finished a month-long strategy review shortly thereafter, announcing U.S. operations would significantly shrink as part of a global overhaul. Again, who was just firing all those employees recently? Deutsche Bank. Who did Michelle White talk about as a bank? Big trouble? Deutsche Bank. Some 10,000 workers are expected to be fired. It is unclear just how much of a factor the spectacular trading loss was in the CEO's decision to cut headcount by 10%. As Bloomberg concludes, a number of leaders and dealmakers in the U.S. have left the bank amid the shakeup. In a letter to staff this month, Sewing said the firm has taken steps to reorganize its business, bolster capital, and reduce risks. I'm sorry, sir, could you repeat that last one? In the same way you did it, emphasis. Reduce risk. You had a 12x, you had a cryptocurrency type of unbelievable rally as a freaking loss. 12x. We only hear those numbers in cryptos. The hell are you talking about? And usually it's up. We had a 12x loss. But we're going to reduce risks. Many of you are sick and tired of bad news, he admitted. Well, guess what? Now there's a little bit more. Take care.